Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, the next thing that we look at are these two-wave price developments, the two-wave corrections. This is one of my favorite things to look for when I'm trading Forex and futures, because it's something that is so repetitive that you can find it very easily on almost any time frame. And it can serve as both continuation action as well as reversal action. So for instance, in this first example here, we have it as a continuation pattern where we have the two waves of correction. But over here, we have it as a reversal pattern where it forms a bit of a triangle, kind of to some degree an avalanche, because we have this congestion here at the lower end of it. And then that breaks lower. Same pattern is repeated over here as well. And so this entire base or congestion zone here could be considered a triangle, but you can also label it an avalanche as well because it's the first initial congestion zone or reversal coming off of the highs. Looking at trend development, we're going to go into here next something that I talked about in the last presentation, and that is a very specific setup that was taking place in the market at the time. We had this three-wave price drop on the USD JPY. So in a presentation I did on April 1st, we were looking at this three-wave correction and looking at the likelihood that this was going to lead to a larger correction off of that third low. So this is where it was trading heading into the April presentation. The reason this is three legs of selling as opposed to four legs of selling, which you might consider if you look at this here in the middle, is the fact that we're really looking at two-wave corrections. You have an initial two-wave correction here and a secondary two-wave correction here. It's just that the correction is a bit deeper. But notice that the time it took for the correction to form is the same in each of these. So because they're the same, this is part of the same trend. So we do have 1, 2, 3 legs of downside, not 4. So heading into April, we were looking at a larger reversal off of that lows. And here's what you can see played out. So coming off of April 1st right here, we had this larger pattern where the trend channel broke on the downside and it broke to the upside. There was a little bit of congestion here in May heading into June where a base formed this two-wave pullback before it broke through that upper trend channel, but in either case the channel broke. Now heading into the last presentation I did in July, we had a similar price development forming on the USD CAD. I've kind of skipped forward here and we're going to go back a couple slides, but what I want you to see here is that here's the price action that was happening on the USD JPY heading into April's presentation right here. Notice that in the presentation heading into July, we had that same price development. We had a number of legs of downside, and we had this two-wave drop on this daily time frame, and that congestion zone just coming up off of that off of that low. So we had the same price development, which then suggested that the USD CAD would have a very high probability of breaking higher. Now if we go back and look here, this is what we were looking at heading into the July presentation. And what we looked at in that presentation was one of the final things was how the pace or the momentum was shifting at the end of this congestion. So we had some really strong upside moves within the range. But the difference between the highs and the lows was beginning to slow down. So we were seeing a slower pullback, more gradual pullback, taking a longer time to come from the upper end of the range to the lower end of the range on that last leg down than we saw on the previous leg down. And into the last presentation, it was beginning to congest along this upper level. So we were looking at some sort of pattern or formation that could lead to a breakout from that trading range. Now we go forward here a little bit, and here's what you can see happened. We had a two-wave correction, but it still held the upper end of that trading range. You can see the middle of that trading range here marked in blue. And this two-wave correction then formed a much more gradual pullback that when that two-wave pattern broke higher, it triggered the buy for the USD CAD. Now what we're looking at is the resistance levels. In the previous presentation, I showed you this slide, and it showed you where the main resistance levels would be on this particular setup based upon what had happened in the USD JPY. What you're seeing here is that patterns repeat themselves. Now, they might not play out exactly. You can get changes in momentum, pace that shift things. Maybe a pattern forms at one point in a trend development where the same pattern formed at a different trend placement in the past, and that can affect its outcome. But in general, patterns are repetitive. When you're looking at price action in the market, some people think that technical analysis isn't a legitimate form of analysis. All you have to do is really just show them this type of proof that you can see that it really does work. A problem that people run into is they don't realize that all we're looking at when we're looking at price action is we're just looking at human emotions as they play out. So basically, all we're seeing here is a graphical representation of how people react to different emotions, panic, euphoria, fear, that type of thing. All we're seeing is that represented. You're going to see similar graphs when people are graphing emotional responses in psychology or any other area of the sciences. My background was in art and science, so obviously it was easy for me to take to things looking at, patterns and similarities in patterns because I naturally kind of gravitate towards that thing anyways. I always see symmetry in things that I'm looking at. So for me, trying to read price patterns came very naturally. For some people, it's going to take a little bit more time. It might be a little harder for you to develop that skill. But it is a skill that can be developed. You can learn how to look for these prices, these price actions, these price patterns. That's why what we're doing here is we're looking at the building blocks of price action. A lot of, the books that I've seen, Barnes & Noble, that type of thing, they're focusing on patterns as a whole. They're focusing upon things like a bull flag or a cup with handle, but they're not looking at what goes into that actual pattern itself. So for instance, we're looking at, something that I've called a phoenix pattern because it's a reversal off of a low where it's the initial turnaround, and it's also congestion or trading range. And although it looks like just a flat line if you're looking on it like a weekly time frame, if you go and look at this on the daily time frame, you can actually see the momentum shift. You can see trend development issues. You can see all of that action taking place on these smaller time frames. And it's looking at the building blocks on these smaller time frames and then comparing that to what's going on the larger time frames that's really going to give you the heads up, not only in terms of being able to get the best entry, because let's face it, if you just took a trading range breakout, your entry's up here. Now compare that to the stop, or maybe you placed a stop under the entire range itself. So compare that to what my entry is, right here to right here. You're dealing with about a third of the size of what a stop would be based upon on a lot of the typical technical books.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.